Good evening, everyone. Time for another silver update. This is the chart of the US dollar or the Argentine peso, provided by netdania.com. You can click on the link below. This is a fascinating chart. First of all, because it shows the just horrific policies of the government of Argentina, what it results in. You can see since about 2010, or actually from the beginning of 2011 at about 4, we're now at 8, that the people of Argentina, their money has lost half its value. So it can be a very risky endeavor to keep your money, your savings, stored in a national currency. Now let's look at another currency here. This is the Ukrainian Karbovanet. I don't know if that's how you pronounce it. This is the Ukrainian currency. Now, if you remember when I did my coverage of the Ukrainian crisis, it was actually, the top was there. You can see that it is run all the way from 11 to 13. So that's another, to roughly almost 20% devaluation of the currency. Things certainly haven't gotten better in the Ukraine since the new government has come in there. Big surprise. But here's the interesting thing about this chart. This is exactly the opposite of what we saw in the Argentine currency, where you had that parabolic rise, a very smooth, round rise into that parabola. Here you have sudden, violent devaluations. You can see a sudden violent devaluation from 4.5 to 9, right there. 50% devaluation, just almost immediately. If it happens again, roughly 8, maybe the top's going to be here at 16. So the value of your money cut in half. That can happen. That won't happen to you, of course, if you're saving your savings in silver or gold. Now here's an article from Goldcore about this. Gold in Ukrainian currency surges another 7% this week. Collapse continues. This is particularly evident in Ukraine, where the economy is nearing collapse and the currency is in free fall. The Hryvnia, I don't know why that's different than the Carbonet. That's something about that name. Has been the world's worst performing currency in 2014. The charts below give an indication as to the terrifying magnitude and speed of the recent decline in the value of the currency. This week alone, the currency has fallen by 7% against gold, or gold per ounce has risen from 15,669 hryvnia per ounce at open on Monday to 16,880. There's the chart. Year-to-date, gold in the hryvnia has surged 69% from basically 10,000 to about 17,000 per ounce. Or put it more correctly, Ukrainian's national currency has collapsed by 69% against gold in less than 4 months. This has resulted in the cost of food, fuel, and basic staples surging for ordinary people in Ukraine. That's what always happens. That's what has just happened in Ukraine, rapidly, has been happening slowly in Argentina, very rapidly is occurring in Venezuela. Those two are being destabilized by their nutcase leaders, and the Ukraine is being destabilized because it's a pawn in some giant global chess game between the United States and the Soviet Union. People are buying gold, silver, other hard, tangible, and income-generating assets. Once again, the lucky few who own precious physical gold are being protected from the currency collapse. They're in a position to buy food, water, property, land, businesses, and other income-generating and life-sustaining essentials, thereby once again showing the lack of knowledge and sometimes simple bias of those who claim that gold is not a safe haven and discourage investors from owning even a small allocation of gold. Gold is protecting people and companies in Ukraine today and will do the same for people and families in other countries in the coming months and years. Boy, isn't that the case. Now, let's talk about how that is coming. Here is an article on Zero Hedge talking about how the Democrats have been instructed to not talk about the economic recovery. Their polling has found, well, I'll just read this. As a start, Democrats should bury any mention of the recovery. That message was tested, and it lost to the Republican message championed by Karl Rove. They wrote, so say Democratic strategists in a blunt declaration that such talk skips over how much trouble people are in and doesn't convince them that policymakers really understand or are even focusing on the problems they continue to face, etc., etc. And then they give some charts here. Now these are very interesting charts because the two things that these charts have in common, if you look at them, the first one is, let's go in and do the up close here. The first one is job hires versus 12-month cumulative change in payrolls in the thousands. So the thing that really stands out about this chart more than anything else is that you can see that the two roughly track each other for a good nearly 10 years, where they pretty much move in lockstep until we get to the current recovery, quote unquote, from the crisis. Here you see a disconnect about in early summer of 2009, late spring, where the number of hires dropped off, was rising but did not rise anywhere near the 12-month job change. So this is a perfect example here of the fact that they're lying. They're lying about this recovery. This is a fake recovery, and it's right here in this statistic. Now the other one is the corporate profits, and you can see here those two as well very, very closely track each other. You can see it goes all the way back to 1945 almost, and you can see the one dips above and then below. They pretty much are in line with each other until we get to about 2000, and you can see that roughly 2001, around September 11th it looks like, you can see corporate profits take off and the employed percent of population actually begins to decline. It starts to recover until the next financial crisis. Of course, corporate profits collapse and the percentage of people employed collapses as well, but then corporate profits explode. Now, why is that? Well, it's very simple. Because they took the bailout money and they gave it to Wall Street and the banks, and the people who own the corporations benefited from that because the banks went and bought the shares and pumped up the stock market. So the rich, here's your rich getting richer and your poor getting poorer. But of course you're going to hear the stories now because they're trying to spin this thing saying that the reason why the rich are getting richer and the poor are getting poorer is because we don't have enough taxes, which is absolutely ridiculous. But that's the spin, that's the story that they're going to be putting out. So last story I wanted to cover here, this is benswan.com. Obama begins multi-million-dollar Detroit bailout. Now, if you remember, Detroit went bankrupt and Obama said that he wouldn't allow that, but of course now begin the backdoor bailouts here. $100 million in taxpayer money is on its way to Detroit. Only 16 short months have passed since Obama took credit for Detroit averting bankruptcy. Quote, "We refused to let Detroit go bankrupt. We bet on American workers and American ingenuity, and 3 years later, that bet is paying off in a big way," said Obama in a re-election campaign speech. It was October 2012. Obama won re-election. Detroit became the largest city in the United States to file for bankruptcy only 9 months after Obama's speech. I mean, this guy, The opposite of the Midas touch this guy has. The solar companies, pretty much everything this guy does results in abject failure. It's pretty amazing. U.S. bankruptcy judge Stephen Rhodes delivered the ruling which declared Detroit could move forward with its plans for Chapter 9 bankruptcy only 5 months after the filing. According to Judge Rhodes, quote, "This situation has proved unworkable. Detroit is more than $18 billion in debt." That's a lot of money if you think about that. $18 billion for a bankrupt city like Detroit. There's just no way. With taxpayers exhibiting visceral reactions at even the slightest hint of a bailout, the Obama administration ensured Americans no more bailouts. In February, Gene Sperling, the director of the White House National Economic Council, announced that the administration would not bail out Detroit. Sperling called the prospects of a bailout non-viable and said it would be misleading to float the idea of a bailout. Regardless of the rhetoric, the bailout-addicted administration has been stealthily executing a bailout of the city's endangered pension funds. So we've gone from transferring taxpayer money to Wall Street and their buddies, and now we're going to be transferring taxpayer money to the unions and their buddies. According to Detroit Free Press, Obama plans to send Detroit approximately $100 million to relieve the city's pension funds. That seems to me to be a bailout. The report points to Obama's tough midterm prospects while stating that he and Democrats have been under pressure from unions not to let government retirees suffer in Detroit. There you go. We knew this was coming. There was no question about it. But of course, with $18 billion in debt, and there's your picture of Detroit, $100 million isn't going to do anything. It's going to buy some time. That's about it. The whole thing is just top heavy. There's no way that it can continue. So those are the stories. They're all pointing to the same thing. You have to keep in mind that the thing can come slowly. The thing can come very, very quickly, as it did here. And the only way to protect yourself, at least somehow, in some way, have some protection, not guaranteeing that it's perfect protection, but at least have some protection against this type of rapid currency devaluation, is to stack precious metals, physical gold and silver. And we'll talk to you next time.